Salesforce has just released their Q2 earnings and the market does not like what they see. It's down 5% after hours from $180 a share to $171 a share. We're going to be going through these numbers right now and then taking that to my discounted free cash flow model and Buffett Graham intrinsic value models to see if this stock is a buy or a sell. So as you can see, Salesforce is down to $172 a year. If we go to the year, you can see that it hit its pretty much peak at $300 a share and has dropped off around about 40% since then. Now this stock has been pretty consistent. It had a massive growth in the pandemic of almost 100%, but it's had a strong drop off since then. If we compare it to the broader market, which is the S&P 500, if we look back over the 5 years, Salesforce obviously did beat the market, but if we look over the last year, the market is down 7%, while Salesforce is down almost 30%. So let's get straight into the earnings. Firstly, we are looking at the statement of operations. We're looking at the revenue. So is the revenue for the quarters increasing? And revenue for CRM is split between subscriptions and support, professional services and other. And the total revenues are up 6.3 billion to 7.7. And also they have the 6 months ended here on the right hand side, 12 to 15. So revenues are up, which is good to see. Now we want to have a look at the net income, which is down here. How do we get net income? Well, revenues minus the costs and everything else. And you can see that the revenue is down $500 million in 2021, and that is now down to a mere 68 million. The trailing 6 months, 96 million compared to $1 billion. So why is this the case? Well, if we look here and compare it to the previous years, total cost of revenues are up from 1.6 to 2.1. You can see the major increase is in obviously the subscription support, but they did grow that by over $1 billion and increased it by about 300 million. So that's not too bad, but the main things here, operating expenses are up over $1 billion. R&D up 300 million, and marketing sales is the main driver here. That is up a substantial amount, and overall that has made the net income still profitable, yes, but decreasing quite a lot. Now, the next thing we would like to look at is, well, we'll just quickly touch upon earnings per share. You can see here it was 57 cents a share down to 7 cents a share, but I was going to talk about the, not the earnings per share, the income per share. So you can see here, these are the shares. They are issuing more shares, 933 million to 997. So what does this mean? Well, if they keep on issuing more shares, you own a smaller piece of the pie. Now, if they were issuing more shares back at this point, that was a good investment for them or good decision for them because the stock price was at all-time highs. So now that the stock price is lower, maybe they're going to look into buying back those shares or buying back more shares to reward the investors that way. Now, let's scroll down and go straight to the cash flow statements. I'll be using these in my discounted free cash flow model, but where do we look at to get free cash flow? Well, it's cash from operating activities minus capital expenditures. And you can see in the 3 months, 2022 compared to 2021, net cash provided by operations is down 386 million to 334. And the CapEx, they have it very nicely for here. CapEx is down also. So that gives a free cash flow ratio, well, you can see around about 100 million for the quarter. Now, if we look at the trailing 12 months, the trailing 6 months, sorry, we've got 3.6 and 4 billion, and the capex is 380 million each, which is about 3.7 billion in free cash flow. So let's take this to our models. We've calculated the future free cash flows here. Based on those numbers, the free cash flow of the company was 5.6 billion. That is the trailing 12 months of these numbers. We've got discounted free cash flow, calculates the future free cash flows, and then discounts them to today's value. To terminal value, and then discounts them today, and this gives us a fair value of the company. Now, firstly, we'll be looking at the averages, and you can see here immediately these free cash flows calculated are very, very high. So I'm just going to quickly do this. This is not a fair value that I see, and that gives a value of $800 a share. But we can see here these, based on averages, the free cash flow is growing massively. Now, if we look at this, the free cash flow to net income ratio is very, very high at the minute because of their low profits. So it's quite difficult to estimate here. So if we use the 2019 number, which is about 100%, this drops down these numbers quite a bit to 2.1 billion and increasing. That would bring it to $70 a share. So I think let's just increase this a little bit. Let's assume that they're going to be increasing on free cash flow. Let's break this about 275%. Then we'll look at the revenues. Analyst estimates, you can see, are 31.7 and 37 billion. We take an average of these. This gives us about 14%. Relatively happy with that number. You can see it is slowed in 2021. So let's just bring this down a touch to 12%. And the net income margins, these are all over the place. We're going to use the average here, almost 7%. So that actually gives a calculated stock price of $193 a share. Now this is with increasing free cash flow over the coming years. So the discounted free cash flow model says it's a buy. Next, we look at the Buffett-Graham intrinsic value model. What does this do? Well, it takes earnings per share and expected growth rate into account. Expected growth rate here is on Yahoo Finance, and we'll see what that says. This is the 5-year growth for CRM or Salesforce, and you can see 15.9%. So let me just go back to my model, and you can see I've already included. AAA bond yield is here. This is the Moody's AAA bond yield, and it's 4.06. So let me just go back to here. What does that give us in terms of a discounted free earnings per share? Wow, the fair value, $45 a share. So the Buffett-Graham intrinsic value model does not like this, and this is because of that low earnings per share. As you can see, the net income is very low, so it doesn't like this. What do analysts say about this? Analysts, high side $332 a share, lower side $150, an average of $242. So this is 12 months looking on. So analysts are saying it's a buy. See, the discounted free cash flow model is saying it's around about fairly valued, maybe a small increase, and the Buffett-Graham intrinsic value does not like this stock at all, as you can see here. So models are in disagreement, and analysts are a bit all over the place as well. So I don't really know what to say about this one. You can see it's down to $169 a share now, down 5%. So once again, the market is not too keen on what they are seeing. We'll just have a quick look at some of the technicals here. We have the moving averages, 50-day in green, 100-day in yellow, and a 200-day in red. And what is this telling us really? Well, you can see that the price has increased above 2 of the major moving averages recently, which is a good sign, but is now dropping below them again. So that is more bearish signals in terms of the moving averages. Let's just get rid of the 100-day, and I'll quickly add the RSI, which is the Relative Strength Index, is the stock in overbought or oversold regions. And you can see it's trending pretty even, but it is on the more oversold line. Now we can see that this has got, in the overbought regions, had a massive drop off and has been in the oversold regions quite recently, but is trending about the middle. And finally, we would like to see the MACD. Why do we care about that? Well, it shows you the trend of the stock, and we'll obviously see that the trend may have just attained. Oh no, there you go. So the trend was a bit positive over the past couple of weeks and is negative again. The MACD and signal line have crossed, and probably with the price dropping to $170 a share, we may see this drop below the zero line, which is once again more negative sentiment. Right guys, thanks for watching. Please give a like on the video if you enjoyed it. Subscribe if not already, and I'll catch you guys next time.